Good morning, traders. It is Wednesday, February 20th. Taking a look at the morning charts, we got the US dollar index. You can see yesterday we had the US dollar continue to push upward, and yesterday we more or less saw it pull back down more or less into a support zone, which is this previous more or less pivot high, this kind of breakout zone. You can see there was a breakout, a pullback, another push higher. Anyways, it pulled back there yesterday, really helping to boost the equities market. And this morning you can see this green bar straight up. We've seen the US dollar have a very sharp bounce. If we just zoom into that price action, you can see pretty clearly we've had a nice strong bounce off there. And of course, that's not really having any effect on stocks or commodities. The only thing it's actually affecting this morning are precious metals, which are down fairly sharply again this morning. They're kind of starting to go into free fall mode, meaning everybody's starting to just bail and get fearful and unload their gold positions and silver positions, and really there's just a lot of selling going on in that sector. So if this US dollar does break out to new high and continue to push up, we'll probably see even stronger weakness in precious metals today. Let's just jump into precious metals first this morning. Here's gold chart. This is a 4-hour chart of gold, but zoomed back you can see about 6, 7, 8 months. Anyways, you can see we had a breakout above our green resistance line, and we had a run right up to the previous high back on the chart, which was around the 1800 level. Since then we've been having a multi-wave correction. I pointed this out I've pointed out multiple times in the last couple of weeks, but more or less we've had a 1, 2, 3, 4, 5. This is the fifth wave. If this is the fifth wave, then we could be setting up for a pretty significant bottom. Really we want either a 3-wave, a 1, 2, 3, and then rally, or we want a 5-wave and rally. So we are coming down. We did break this key support zone in the last week, which has triggered a lot more fear and selling, and we're starting to get some follow through. So the next support zone for gold, if we just zoom back on the chart, you can see here, well, if we just go back, we've got this previous pivot low consolidation before it did break out. So we're going to have this level here, which coincides with our downtrend line, and then of course we've got the more significant low, which is not a whole lot lower than that. It's the 530 level. Zooming back to the big picture, you can see where we stand. Overall, you could really just color this blue box in these two support zones and this downtrend line as a pretty major support zone. As we fall down into this level, there's a lot of reasons why gold should at least pause, if not bounce and bottom, and possibly start a pretty major rally, at least back up to the 1800 mark, I would think. So anyways, we're starting to get there. We're picking up speed. We're in the fearful stage where we're starting to see this type of price action where you just start to see continuous bleeding, selling of price until it gets to an extreme. Same here, we had a big wave of selling, had a little bit of a pause, and then it had another continued fear of selling, pushing down into that key level. And then of course the first big wave after a major run up in gold, there was just a lot of stops being triggered, and it also hit this key level with a spike low and had a significant bottom. So that's kind of where we're starting to come into this month more or less, and I'm starting to like gold as we get down to this level. Now if this support level is broken and closes below there on a weekly close, then we could really see gold could have topped and precious metals, and that could be the end of that. Could be more of a ride to the downside than actually looking for longs. But overall, we're still in a major bullish pattern. It's pulling down. It's starting to come down to a major long-term key support zone. If it gets there, we'll probably dabble and get long to see if we do get a very nice bottoming formation and a bounce that could actually take us much higher, possibly to the $2,300-$2,400 per ounce for gold. Looking at silver, here's a silver chart. We had the breakout above this green dotted line here. We had a nice run up to the previous pivot high. Again, it's had a nice multi-wave pullback. 1, 2, 3, 4. It's setting up for wave 5. The question is, where's it going to find support? It has broken our previous pivot low. We've got some pretty high volume still. Looks as though it still wants to continue to sell down. So if we zoom back in time, the next support zone will be this mini breakout that we had back here, which is still quite a bit lower. And if we zoom back to the all-time lows, we're looking way down here. There's a lot of room for gold to really, or silver to really panic and wash out and have a sharp drop. Now if we just go back to the big picture, Let's go back a little bit more. You can see where we stand in the grand scheme of things. In between these blue lines are going to be pretty major support, and we are starting to get close to that top blue line. Again, that would also coincide with more or less a down trend line, although it doesn't quite match up as nicely with the silver chart. But overall, we're still holding up in a major bullish pattern. We're coming down to a significant possible bottoming place for silver, and from there we could see a nice rally back up to the 36. And of course, if we do have that major breakout that a lot of people are anticipating, we could eventually see it back up to the $50 or even $70 area. Taking a look at miners, let's just take a quick look at the charts. Of course, it's been in a downtrend for a long time, continues to be in a downtrend. It's picking up speed. It broke below this previous pivot low here. It continues to pick up more speed. This morning it's looking like it's going to gap even lower. We're flirting with this other significant bottom. Let's just zoom way back in the charts here. There is a possible very nasty looking head and shoulders forming on this chart. You could argue there's one here, major head, or some people even say it could be a double-headed head and shoulders, depending on your analysis type and what you want to call it. But overall, we got this neckline here. We're coming down to pretty significant support. If this does break, it could get pretty bad. It can pierce it on a daily chart or intraday chart, but if it closes on a weekly chart below there, it could be a major signal that we could see. We could literally see gold miners just go into free fall mode and really clear the air for more or less to be in a sharp downtrend. But I don't think that's going to happen. Really, we've had a pretty significant pop here. This pullback is looking pretty ugly, but when you look back at this chart in this time frame, more or less, it has had a significant fall. It is coming down to a major neckline support zone. It's oversold, and the fact that gold, silver are also looking at that they're at these major support zones or nearing them, I think we're in line for, we could see a very sharp bounce. And we could see, if we were to just redraw this and go forward in time here, we could very easily see we've got this neckline across here, and we could see silver really make some type of, it could chop around, or sorry, these gold miners could chop around, eventually form some type of a base, which eventually break out and go to the upside. That's just a wild guess, but overall, that's kind of where we stand, is something very similar that this could base for some time. Now, gold miners have been underperforming for a year or two, and there's no reason that they will stop underperforming. They could easily just trade sideways in a big range here in a basing pattern, while gold and silver continue to move higher. But overall, we are coming down into this support zone, and it's getting oversold, and I think we're setting up for a knee-jerk reaction bounce in gold and miners. Now, just quickly pull up the SIL, the silver miners. Let the chart load a little bit. Here's the silver miners. You can see similar price action, strong surge up. We're really coming down into free fall mode. Now, this type of price action where it waterfalls down, bounces, waterfalls down, that's a sign that we're getting close to a bottom, and that's more or less a bottoming kind of panic sell-off wave. Now, the biggest moves happen usually right near the end, and so you got to be cautious with this. Could still continue to slide very sharply, significantly down into these lows and play catch up to the gold miners. And overall, I've got my eye on it. I'm starting to like them at these extreme oversold levels, but I don't really want to jump in and try and catch a falling knife just yet until I see some extreme panic, extreme price action to the downside, and gold and silver really starting to get into their blue major long-term support zones. Taking a look at the other safe haven, which has been holding up much better than gold, these are the bonds. You can see it's been working sideways to its trend line. Yesterday started to move down. If this, obviously the move down in bonds means money's coming out of bonds and going into equities. That's what we saw yesterday. We saw a new high in equities. Bonds more or less hit their down resistance trend line, started to move down. If this breaks down, we'll probably see stocks continue to move higher again today. Now, again, this is forming possibly, there's a nice clear resistance zone here, could be forming some type of base. If it does pop above this resistance, this upper resistance line right around the 144 and above this red down trend line, then we could see it have some speed and really pick up, and that means the stock market will have a correction. but overall it continues to be in a downtrend and is heading down again this morning. Taking a look at commodities, here is the crude oil chart. We've had a nice run up. It's flagging at resistance, kind of just churning. So there's all the people who got in down here are unloading, and people are starting to accumulate here. So we're seeing just a exchanging of contracts. It's still very bullish price action right now, and it looks as though it still wants to hit that 100. And technically this pattern here, if we were to just zoom back a bit, you can see we had a very similar pattern previously. More or less we had a long run up, we had a consolidation through this red line, and then it had a final squeeze up to that 100 mark, which got slammed. That's kind of where we stand again today. We've got a consolidation. Wouldn't be surprised if we see that final squeeze up. Now generally after a strong run like this and a bull flag, this can actually signify the halfway mark, and I don't really want to think about it, but more or less there is potential for crude oil to run all the way to about the 108 area if this pattern actually plays out. Now that being said, the $100 is a pretty major resistance zone. It was a major support here, major breakdown there, major resistance there, and so I wouldn't be surprised if we get to the 100 if we see strong selling jump in. But overall this pattern here is still very strong. Bull flag and setting up, and bull flag is usually the halfway mark, and so it could really rip to the upside, which wouldn't be that good on the economy. So I bet you it'll get to the 100 mark. We'll probably see some sellers step in and slam prices back down. Looking at natural gas, here's a forward chart of natural gas. Had a nice pop yesterday. Overall, I'm not a fan of this chart at all right now. It's kind of tapering down. Very strong waves of usually 3, 4, even 5%. Strong waves down, strong waves up. I'm not really feeling natural gas lately, and I'm just going to avoid it. Looking at the SP 500, here's a daily chart. We had that pop yesterday, squeezed it right up into our upper resistance channel, put it into an extreme oversold condition, overbought condition. Now we are in an uptrend, so you'll naturally keep bumping in up against that resistance, that overbought condition. Really all you're looking for are the oversold conditions to get in and be trimming and tightening stops on overbought conditions, because a sharp pullback could happen at any time. Overall, if we look at the futures chart for the SP 500 yesterday, I drew this out yesterday, that we had this more or less these floors and ceilings. More or less we chopped around here for a couple weeks, finally squeezed above it, and then we've been chopping around here for a week and a half, 2 weeks, and then finally yesterday we got that pop through it. So now we're at this next kind of floor. Wouldn't be surprised if it chops around and plays around in here for a bit, and we'll see. Eventually the market's going to have a pullback, and when it does, it's probably going to be fairly sharp, but overall it's continuing to grind higher, and as the 20-day moving average comes up and gets close to it, it slowly kind of squeezes upward pressure on it, and prices seem to pop and then pop. So we'll just see. Right now we're trading a couple percent above the 20-day, and really until I think the equities trade sideways here and get squeezed again, consolidate, we won't see another pop much higher. Taking a look at the ETFs, the KOL and TAN. Here's the KOL ETF. This is the 60-minute chart, just showing that we had a nice pullback here. Came down. We more or less ran this ETF, kind of ran the stops. We had a clear pivot low here. It came down. You can see the first time it broke those pivots. Let me just zoom in a little bit. If I just go back here and zoom in, just to kind of show people what I mean by running the stops, is when there's a clear level of support from a previous chart, usually the market makers will run the price down, and they'll want to break below this pivot low, because anybody who bought in this area or here will naturally put their stop in. Well, if it breaks below this pivot low, I want out, and eventually the market makers will eventually step prices down, and they'll go, a penny or two below this pivot low, and anybody who's got an order in there saying get me out if it breaks that low, market order, and close out my position. And that's what they do. You can see they stepped it, and you can see there's a big spike down. It ran the stops, and then natural that was just the stops stretching the market beyond where it's valued. It got undervalued, and then it comes right back up once those orders stop. Eventually it did pull back and dip a little bit lower, but you got to be very cautious. The market likes to do that, and then you'll see it once it runs the stops, kind of shakes everybody out. Usually it takes up to about 3 days. You'll see that new low squeezed out for about 3 days, and that really is enough to get the majority of the market out, and then you'll see a strong rip to the upside, leaving everybody behind right at the low. And I originally had our stops set down here. I didn't really think we pulled back that far. Overall, once as we started to get down there, I did move our stops even lower because I didn't want us to get shaken out like that. And now we actually bought right down at this level. As it flushed out the stops, we actually got in down there, and then we've got this nice run higher, and it looks as though we've gone from more or less bear flags where you got to move down, bear flag, move down, bear flag, move down, bear flag, move down. Now we're actually picking up speed. We're ramping up. We've got a nice strong move. Strong move to the upside. Nice bull flag forming. This could still chop around and pull back even more, but eventually this looks like a bull flag that points to higher prices. And then once we can break out, see the KOL break out this multi-month basing pattern, I think we could see some fireworks and really see this take off. Looking at TAN, the solar ETF. Oops. TAN. Here's the TAN. We've seen strong volume move into the solar. Some of the solar stocks exploded yesterday. We're seeing it's continue to move up, and it looks very bullish. We are seeing extreme volume here. We're seeing some pretty big price action where prices are moving 5% a day. And overall, that it's somewhat kind of scary. Usually when you get huge volume like that and the size moves usually you're coming to a market top. Now, that being said, we are in a pretty major we're breaking of a pretty major basing pattern, and the only way to get a grasp on not getting too worried and taking profits is to drop down to a longer time frame chart. So here's the weekly, and you can see how fresh a trade really is. You can see here that you go from the daily chart looking like it's ready to pull back, and you want to lock in gains. You see this pattern here. You see the nice strong move, bull flag, another surge, longer bull flag. The bigger the bull flag, the next the run will be. And of course, we're only 1 week up. Really, we're only a couple days in here, and we could easily see. You can see previous sell-offs and runs in the market lasted 3 to 8 weeks. So we've got potential that this could just keep grinding higher for an extended period of time. So when you drop to the weekly chart, you just realize that there's still lots of move left. Really, this has just started to break out, and if we do get the follow through and we get that explosive move, we're going to see some pretty significant gains going forward. That's the same with the gold ETF. Let me just drop to the KOL. You can see this pattern here, very strong basing pattern. We've had lower lows, and now we're starting to get higher highs, and we've had more or less a surge, pull back, bull flag, another surge, longer bull flag, and we're just starting to work our way up. If we can break above this resistance band and close above it, we could see coal start to break out, and eventually it's got potential to run for a month or 3 to the upside with about a 31, 32 target on it for a pretty first major resistance zone, which is significant gains from where we are right now. Taking a look at the market sentiment, let's just pull up the bar charts here. Let me just move everything over a little bit. What I want to just show here is simply there's a couple numbers I like to watch, and that are the new highs, new lows for the NASDAQ and the NYSE. Generally, these new lows, when you're in an uptrend, they'll usually flutter around the 5 to 15 mark, which that's fine. That's not many new lows. When we're in an extremely strong uptrend that has the tendency to keep on running and not look back, we see these trade over the 200 and into the 300 mark, and that's where we've been for the last little while. And we had another strong close yesterday. When these are below the 200, you can get the trend isn't as strong, but right now the fact that we have more or less 500 stocks hitting 600 stocks hitting new highs, that's almost it's about 8% of the stock market all moving to new highs, which is very powerful. And we can't give up on the trend. You don't want to try and short the market, because this kind of market has got so much power, so much money is moving actually into it, and people don't care about paying new highs, that you just don't want to get in front of that. You want to ride the trend until proven wrong and then play the new trend, which would be down. Taking a quick look at the market momentum. Here's the market momentum again. This is anything over the 101 is overbought on a daily basis. So we got close there. We tagged it yesterday. The market stalled out. It doesn't matter how high it goes. If it gets to the 101, it just means more or less the market has moved far enough in one day that the move should be done. We'll probably see a pause or a pullback the next day. So that would be today. I wouldn't be surprised if we just see a calm pullback or a pause today. Anything below the 99, I consider the market on the intraday basis to be oversold, and usually the next day you'll see a small bounce or a pause in the market. So yesterday it got us up to that level. We didn't quite close above it. Usually I want to see it close above it, but overall we're right there, and the market's probably, it could squeeze higher again today, but overall the big pop happened yesterday, and that is this is one of the indicators that helps say that the market is overbought. Taking a look at stocks trading over the 20-day moving average, I like to watch this. We're way up here in oversold territory for some time. Anything above, again, the 75 means the market is very overbought. Sorry, I meant overbought. I think I said oversold. But when the market's over 75 here, we are overbought, and the market could have a sharp correction at any time. Now, we've seen this slowly grind its way lower, even though the market's been going higher. And now it's starting to stabilize. Looks as though it wants to take another run up. Could push back up to that level. When this is moving up, we usually see very strong uptrends in the market, and there's room. It's not even trading in the overbought territory. It's at 69 now. It could go to 75 very easily, which means the equities market has room for another significant move higher going forward. Anyways, that's it for this morning, and I'll talk to you in a little bit. Bye-bye.